navigator on board. Visit hamermaps.com.
Dominic Alafaci, collinshouse.com. Dominic, good morning to you. And what's happened overnight, Dominic?
Darren. Well, overnight we had the Dow Jones Industrial Average pretty steady, put on 2 points to 34,947. The Nasdaq put on 12 points, and the S&P 500 was 6 points higher at 4,514. Across the Atlantic, London's FTSE put on a healthy 1.26%, with the French, German and Italian bourses also higher, up over 1%. Gold is slightly lower at $1,984.70 an ounce. West Texas Intermediate is up 4% to $75.85 US a barrel, and Brent crude was also up more than 4%. Then the A dollar is slightly higher against the greenback, is currently buying just over 65 US cents, with the ASX 200 SPY 28 points higher, pointing to a positive start next week. After last night, it closed 9 points lower at 7,049.
Dominic, what's keeping you busy at the moment with your clients? What are the main questions that you're getting, given the climate we're in at the moment?
It's really funny, Emily. If you're in the retirement market, which is what I mainly deal in, there's good news, because higher interest rates means better returns for retirees. And we're able to use through, it's a combination of many different assets, but we're able to get over 5.5% or a capital guaranteed for people, which is fantastic. And even that's for, say, a 5-year term, which is much higher than a bank. And there's even some Centrelink-friendly investments. So people who've got $1.2 million who will never get the age pension, there's some opportunities here to obtain a part age pension, which is fantastic, and lock in good interest rates, because these guaranteed annuities provide you with a Centrelink-friendly assessment. So, in essence, we're very busy doing calculations and helping people invest their money for income. That seems to be the main area. And just quickly, the other area are people looking to get strategy on superannuation, because there's lots of opportunities, if you're not yet retired, to build up your nest egg. Like if you're in your 50s and 60s and you're not ready to retire yet, you've got a lot of opportunity, and there's it's somewhat complex, but easy for us.
Have you had any people come to you saying, look, I'm not coping with interest repayments now, what'll I do?
Look, home loan repayments have been difficult for many, many people. Amazingly, I think we're pretty resilient, because Australians are, I think, what was that famous expression about Yogi Bear, cleverer than the average bear? We kept money aside. We had little savings and I'll keep that money there just for a rainy day. Now, that all has expired. They've dipped into their rainy day account and used that money to top up their interest repayments, because, it's been a massive increase, and, the Reserve Bank should hold its head in shame, telling us it wouldn't increase interest rates for so many years and then, doubling down and really hurting people. So, but I'm glad Australians were clever enough, most of them, to set some money aside. Now, that money's exhausted just about, so the level of savings is much lower, because they've had to dip into that nest egg. The future is uncertain for those people, because we have some good news with US interest rates perhaps being at the top of the peak. We may be at the top of the peak, but we've got so much debt, so much government debt. It's unsure as to whether we're going to get through. Those group of people who are stretched with their mortgages are going to get through.
There's a yarn on the AFR today, Dominic. The 12 hottest stock tips from this year's, it's the Sown Hearts and Minds event at the Sydney Opera House. Now, in this, I hear the grimace, and I expected it from you. It might be time to look beyond big-name, overpriced Wall Street stocks. What's your philosophy around what I've just said?
Okay, look. I think I got licensed in 1981, so I don't know how long ago that was. But this is the same cyclical cycle. It doesn't matter what the state of the markets is. The whole idea of funds management is for them to tell you how great they are. So any ideas that they have, and look, there are some good ideas, but you could wallpaper your house with all of the great ideas, and you would have, I reckon, 400 metres of wallpaper. Just all the great ideas, and of that, probably the ideas that would take up the size of a door will have worked. So would it be... And statistics have proven that fund managers generally get it wrong. They might have a couple of years of great ideas, but consistency, unless you're Bernie Madoff and you lie to people and you actually produce false documents and say, I'm going to get you 12% forever, it just doesn't happen mathematically and anecdotally. You cannot be a consistent fund manager and pick the best stocks every year. Have a bit of luck. You'll be number 4, number 3, number 2, then you'll be number 47, 48, 49, 50, 103 in the hit chart. So it's fool's gold is my version. But you do learn something. I've got to say there is, out of say 400 metres of wallpaper, there might be 10 feet by 4 feet that might be sensible stuff that works.
Yeah.
If they're big name and overpriced, there must be some performance behind them. And if you're going to hold them for a long time, it doesn't really matter what you're getting them for.
I think it's Katie Wilson, was the managing director of ARC, says that Bitcoin could be as high as $1.5 million a share. So if you want to put a couple of $100 there, absolutely that'd be sensible. Don't put your whole life savings in there. That's the best case scenario. Some of the other scenarios are that, Tesla's going to be fantastic. And look, Tesla only started making money a little while ago, then it's rocketed up. If you happen to get the timing right, you made a fortune. If you didn't, you've lost your shirt and your underwear.
And your undies are gone as well. Good on you, Dominic. Dominic Alifaci from Collins House. That's collinshouse.com. Now, Emily, while you can't buy the bars of soap anymore,